meetings be going like 3, 4, 5 hours, but that's not going to happen tonight. So let me just share my screen so we can go over the agenda and then we'll get into the content. Okay, so the agenda for tonight, I already said welcome. I do want to introduce Q, but I'm going to actually save that till the end. Just, for those of you that signed up, you know what this tonight is about. It's the basics of investing in cryptocurrency and NFTs. So we're going to go over like the most basic questions. What's cryptocurrency? What's the origin of cryptocurrency? The same with NFTs. What is blockchain and how does it relate to the virtual currency space? How are coins bought and sold? What are the best platforms to use and stay away from? So kind of like security and regulations around that. How to research and find the best in class coins. For those of you who are in investing for independence, everything we do is best in class, which is why we stay away from things like Robinhood. So yeah, we're going to talk about the best in class coins and also how to spot red flags. So moving on to introducing our illustrious host tonight, or our expert. Sorry, y'all. Q, I'm actually gonna, Q got a lot going on, so I want to make sure I read it accurately. Quentin Martin, first of all, believes wholeheartedly in the words of Kobe Bryant. The most important thing is to try and inspire people so they can be great in whatever they want to do. He believes this to be the root of all of his life's purpose, not only as a business development professional, but especially as a youth mentor. Quentin Martin is a native New Yorker, raised in the heart of White Plains. Quentin had the privilege of participating in numerous programs with the Youth Bureau as a developing young man. Those programs helped shape him as a developing young adult. As a result of attending White Plains High School and the Youth Bureau combined with caring and dedicated teachers, coaches, and other community professionals, Quentin was able to hone his skills in the classroom as well as on the basketball court. And he received a scholarship to St. Thomas More Prep School for a year. That postgraduate high school year afforded him the opportunity to continue to grow as a person and as an athlete, which led to being blessed with multiple collegiate basketball scholarship offers. Quentin decided to attend St. Peter's University on a full athletic scholarship. It's in his DNA, y'all. I know about his grandfather, which is amazing. So it's in his DNA, it's in his blood. After his college studies, Quentin has had the opportunity to work for several Fortune 500 companies, which include Morgan Stanley, where he began as an associate, as well as Merrill Lynch and MUFG Securities. Quentin presently works for Wells Fargo Corporate and Investment Banking as an institutional equity research and sales associate. Within his role, Quentin has made dynamic strides towards ensuring equity research and corporate access is intrinsically layered in the company's practices on all levels. In 2019, Quentin was selected to hold a seat on Wells Fargo National Diversity and Inclusion Council, Major. In this role, Quentin works closely with the recruiting subcommittee with a key emphasis on grassroots recruiting. Additionally, Quentin has held partnerships with community-based organizations. The two most special to him were chairman of the White Plains Community Action Program, holding a seat on the Friends of the White Plains Youth Bureau Board, and most recently, he worked in collaboration with Indeed and their Black Inclusion Group, BIG is the acronym, to raise money for the Youth Bureau's Saturday morning men's program. Quentin is committed to delivering the highest level of service, excellence, to his clients and colleagues. He is especially devoted to sharing his story and beliefs with his mentees by being a relatable, walking, talking example. He is guided by the principles of incorporating respect, responsibility, and excellence into his daily interactions with others, and seeks to serve as an inspiration and guiding light to those within his community and beyond his community. So welcome, welcome, welcome. Thank you so much again. Many of you have either seen Q with the Come Up series and Mark Monroe, who was our guest speaker back in February, as well as Earn Your Leisure, where if you haven't seen, I don't know if it was the first time you were there, but I'm going to share the video that I literally was like, whoa, that appeared on Earn Your Leisure sometime last year. So again, welcome, Quentin. And what's next? So before you get started, we talked about the recent news, but some of the comments that Chairman Powell said today are listed on this slide. It's only a couple of slides, but definitely timely to have this conversation about the role of cryptocurrency, fiat as it compares to fiat money and central banking. And also we talked about Spike Lee. I'm going to actually send the link to his commercial post, this session, just so you can see, what the conversation is like. He's declaring that old money is out. Is that true? Or are we too early with that? So with that being said, Q, I'm going to turn it over to you.
So you can leave. That's a good place to start, right? So one, thank you guys for taking time out your schedule to even hear me babble, because a lot of times, I'm gonna tell you now, I shoot from the hip. I don't have like a pre-scripted kind of way of going about things. I'm kind of just whatever comes in my front of my brain is what I say, which is good and bad. It's got me in trouble. It's got me out of trouble. But we'll start at this juncture, right? So this is a really cool space. And I think cryptocurrency has gotten a lot of people excited because they see what it can be, and have an idea that you can make money, right? But I think I always start people off with, like, if your goal is to make money, then we're in different lanes. My goal, I'm in a marathon for knowledge. So to start this off, right? So I look at the market completely different. I look at the market as a knowledge-driven vehicle, because if you have knowledge, you have money. Nobody's ever went to a restaurant and had a burger without fries. It just comes with it. Like, when you have knowledge, money just happens to follow you. If you have fries, it don't mean you have a burger. You just have fries. And so cryptocurrency to me, right, is a good way to learn about the market, right? And it's weird because you can learn about different things by learning about something different. So I say this is that when you think about cryptocurrency, most people don't know where it came from. It just appeared one day. It came on CNBC. You said, "Oh my God, Bitcoin is 50,000. This Dogecoin. People making money." Everybody started chasing money, and no one chased knowledge. No one said, "I want to figure out exactly what I'm investing in." So, starting at this precipice, cryptocurrency was really created after the 2008 crash because a bunch of computer scientists and computer engineers didn't like the monetary system that we had. And they were like, "Yo, we don't trust it. People lost money. The whole thing crashed." They created a organic peer-to-peer lending system, which we have in cryptocurrency, which removes the middleman, right? So if I were to lend Kim $1, right, like, I don't have to worry about transfer fees, right? But that leads me back to the first point, right? When we see like digital currencies and governments, and you see Spike Lee and all this kind of acclaim, well, where did it come from? Okay, let's go to our origin of currencies, right? Let's forget crypto for a second. Let's start. The first currency we ever had was gold. That was the first thing we ever transacted, right? You had gold and you could trade gold for things. And then on top of gold is a dollar. We came out with a dollar. Everybody has like a currency. Every country has a dollar. So if I want to turn a dollar into gold or gold into a dollar, I got to pay a fee, right? There's somebody who lives in between those two things. And then we got digital payments, credit cards, we got debit cards, we got a whole bunch of other digital things, right? And we pay those fees every day. We don't know it. So like when you go to swipe your card at Target and you buy bread and it's $2.50, that digital fee that Target and the bank have to pay is priced into the bread, right? And based on how many transactions a business has is based on their pricing metrics, whether it's 10 cents a swipe or $1, whatever it is, right? But it's all layered, right? So intrinsically, there's someone always in the middle that's collecting a fee for transacting the process or securing the process. So is cryptocurrency, or let's say, blockchain, all these things, are they going to replace that monetary system? No, it's been in place too long. You have people, governments, institutions, businesses with a lot of money that make a lot of money in that little space, a little crevices, right? So when you think about cryptocurrency, what's the best thing about it? The best thing about cryptocurrency is no one owns it. It's the best thing about cryptocurrency. No one owns it. You know what the worst thing about cryptocurrency is? No one owns it, right? And so why is that bad? In the stock market, if the stock market were to drop 20% in a day, two things happen, right? Two things happen. They'll stop trading 15 minutes periods, right? Call the cool off period. And if it dropped too much, they would then innately stop trading for the day. But we know one thing, the stock market's a free market, right? It's free, everybody's free. It's not, right? Because the Federal Reserve will come in and back the market. So if the market goes down to a certain percentage, the Federal Reserve now steps in and backs the market and gives a certain level of insurance. So as retail investors, what happens to you guys is that you guys are fully vested in the market. You have all your dollars in the market. The market goes down 20%, you're faced with a decision. Do I sell? Do I stay? But I don't have capital to put in. You're just stuck on your hands. Institutions have a bunch of cash on the sidelines. And when we reach that precipice of 15, 20%, we start to buy up shit, excuse my French. And because we know that it can't go any lower because the Fed's going to step in. And so we know that the bounce back is coming, right? And the returns will be a lot higher. So we've seen companies and valuations jump because at that 15, 20% mark, the worst can go down to maybe another 10%, but everybody else can't come outside and play. And that's the essence of the stock market, because it's a free market, but the Fed really kind of helps to buffer or prop the market up, which is good and bad, right? Because everybody wants their piece of the pie. So that costs money for the Fed to come do that. And these little middlemen between people want their piece of the pie. On the other side of that, peer-to-peer lending is dope. But tomorrow, Bitcoin could be to zero because there's nobody to back the market. So the first thing we have to understand is the risk. Is there a risk in crypto? Yeah. Is there upside? Yes. The upside matches the risk, right? You've seen people make a ton of money. You've seen people lose a ton of money. There's not much stability because you're an early adapter. Is it coming? Yes. But how are we going to receive this? Well, these comments tell you how we're going to receive cryptocurrency. Governments and institutions are going to make sure they're able to layer on top and start that same funnel process with crypto that we did with gold, right? So you start to see it now with governments, with institutions, right? Starting to layer and figure out, okay, how can I put myself on top of this? So for example, if you guys are familiar with Ethereum 2.0 is coming out. Well, who's layering on top of Ethereum 2.0? Visa and MasterCard. So now Jerome Powell says, we're looking at it. We're going to have to regulate it. We're going to put things in the way, right? And why do we get these things that kind of get tossed or hurdles, right? We got an ESG is one of them. It's not safe for it's not safe for their environment. It's the worst thing ever. But they allow people to have private jets. Jets and planes aren't good for the world either, but they can fly all over the world and mess our environment up, right? And so they use that as a hurdle, but it just buys them more time to figure out how to layer. Regulations, we're going to regulate it, right? We regulate everything. All it's doing is buying more time to figure out how to layer it, right? Taxes, we're going to get you on taxes too. So a lot of times when you see these hurdles, the information and how cryptocurrency is transacted never changed. It's just that they're placing hurdles to either scare you or to elongate the adoption because they have to figure out how they're going to get their piece of the pie. They're not going to let a peer-to-peer lending system come in and go, you know what, we don't need you no more, and just allow you to transact. That's not happening. That's not happening. MasterCard and Visa are grandfathered monopolies. You show me a bank card, debit or credit card that doesn't have Visa or MasterCard on it. Maybe Discover Financial, but Visa and MasterCard own 90% of the debit and credit card market. So 90% of the cards in the world are Visa and MasterCard. Visa owns 60% of the float. MasterCard owns 30% of the float. Both those companies make a lot of money on foreign transaction fees, which is nothing special other than You went to France, you bought a bag of chips. They're charging the country, the business, and the bank to ensure, secure, and to transact the business between currencies. They're not letting that business go. The first thing they did was start to layer on top of Ethereum 2.0, right? To say, hey, we could do it faster, we can secure it, we can transact it for you, and figure out a way to get their piece of the pie. Here comes the government, right, with their own digital coin. We saw what China did. China said, hey, we're going to shut this down so we can figure it out, because now what happens if China comes to the market and says, hey, if you want to do digital coins, you have to transact business with us in our currency coin and nothing else. When you buy an investment,
Hey, because everyone doesn't know what China did.
Oh, sorry.
So a lot of it, I think it's about 60% of the people in this room have purchased a coin. There's like another 40% that's like super green. And so even with Ethereum and Ethereum 2.0, can you just give a quick summary of what that means? I know they're altcoins, but can you just quickly say?
So Ethereum is a platform. So think of Ethereum as Amazon. It's a platform that you transact on.
Oh, right. That's right. Exactly. Okay.
So why that's important is because you have coins, right? And those are cryptocurrency. So cryptocurrency is a digital asset, right? In which that you can transact and pay and kind of be able to keep a ledger on, right? So the ledger is kept on blockchain. So normally when you do, like, say you go shopping and you look at your credit card statement, that's normally your ledger. You saw, okay, I went to Macy's, I went here, I shopped here, you know how much money you spent, right? But you don't know how that's transacted. You have no clue how much that Macy's paid for the fees. You don't know how much the bank paid. You don't know all the ins and outs. You just know the end of the story. What the digital blockchain is supposed to do is keep the game honest, show you everything, right? It removes the middleman. So I send you $1 digitally because you did something for me. You get the dollar. It's blocked in the ledger. They encrypt it, right? They mine it. You get paid. I get paid, right? So that's the idea, right? So you have cryptocurrency, the digital asset. You have blockchain, which is a ledger that keeps track of all the assets. It keeps track of everything that is transacted. It keeps everything fair. It's the referee, basically, right? And so that's what it's known. Ethereum is a platform in which you can transact on.
And you mentioned mining. Can you just say what mining is?
So mining would be like when you get a ledger, somebody has to secure and transact that payment and make sure that everything is correct, right? So that's basically the essence of mining all these transactions. Somebody has to voluntarily do that. When you do that, you take up all this energy, right? All this heavy computer science. You go into the system, you secure the payment, right? And you get a coin for your job, right? Because they're removing Visa and MasterCard, and John or Bob can secure a payment and get a coin, right? AKA mining, for doing some of the process of kind of having a more hands-on approach to the market, right? Because normally there's no hands-on approach. You swipe your card, you get a product. You don't take any placement in the middle of that trade. So in the middle of that functionality, you get no reward, no cookie. And so, like, you have, obviously everybody knows what Bitcoin is as far as what it is as a coin. And then you have like a platform like Ethereum in which you transact on, right?
Okay, and Andrea put in the chat, she thought Ethereum was a coin, so she just wants verification that it is not a coin.
It's not a coin. Ether is the coin in which Ethereum creates. So Ethereum has Ether, that's the Ethereum coin. Ethereum is a platform. So think of it as an Amazon style platform in which you can transact business or transact digital flow on. Right, that's kind of the idea around that. Now, I say Ethereum 2.0 is that they're constantly updating, upgrading, and making adjustments, right? Because these platforms are very brand new, very brand new. So again, if you own coins, right, you're an early adapter. With that is going to come volatility, right? Meaning that it could be up 50,000 one day, down 50,000. It's just a lot of movement because there's not much stability, right? And usually big money brings stability, right? And so because you've made money in the market, or those markets are bigger than what they should be at that age, doesn't necessarily mean they have stability yet. And so you're going to get volatility, right? So that's priced in. Now, Ethereum 2.0 is going to be a better version of Ethereum. And that's where the Visas and MasterCards and other platforms will start to come in to learn more about the space and learn more how to kind of get their niche market. And from there, we'll start to see expand, right? But like, what's the question is, okay, well, do we adopt crypto in a year, 5 years, 10 years, 20 years? No one knows that answer. And that's when the volatility comes from. Because again, we have to figure out regulations. We have to figure out taxes. We have to figure out how the old guard is going to get their piece of the pie, because they're not going to let that revenue go. Like, no one's going to let money go when they have a chance to not let it go. And so we have to look at it from a holistic standpoint. But that goes to kind of understanding the investor that you are. Now, most people don't know if they're an investor, if they're a day trader, or if they're a trader. You kind of have to have very good self-awareness in the market. It's like an ocean. Like, you have to know if you're a fish, that you're a fish, not a shark. Because then if you run with sharks, you'll get eaten. And then you'll wonder why, like, damn, they did me dirty. It's like, no, you were running with a bunch of people that you weren't. So the first thing about cryptocurrency, before you even get into an investment, is really the psychology of investing and self-awareness. Because all these things I can tell you about cryptocurrencies and everything I tell you about stocks don't matter if you don't have good self-awareness. You can't be a cat and think you're a dog. It's not going to work out well for you over a long period of time. And so when you get into cryptocurrency, if you can't handle volatility, if you're not somebody that can stomach it, two things: either get out the investment or don't look at it for 10 years. Like, take it off your plate. Don't go look at it every day. I'm sure there's a bunch of people who have investments that every day they log into their account, like, am I up or am I down? And it really has a dramatic effect on your day. And I'll tell you, after being in the markets for like 13, 14 years, I'm so emotionally numb to the movement that I don't even look at my accounts maybe once a week, twice a week. I'm like, let me see what I'm doing. I don't really care, because materially speaking, right, I don't care about price movement. I care about information. Because information is what moves a stock or a cryptocurrency. So like, when Bitcoin moves like that, like, what materially changed about how we use cryptocurrency, or how we plan on doing things? Did anything materially change, or was that just sentiment because big money is just kind of taking their profits? Like, these are the things we have to know at the base level. So first is identity, who you are, right, and what your objective is. Second is understanding where you are. You are in a space that is in its infant stages. I mean, when I say infant stages, cryptocurrency is the baby in the infirmary. We don't know if it's going to be an NBA star, if it's going to be a college graduate, if it's going to be the president. We don't know. It's just the cryptocurrency and all the coins and everything else. They're babies in the infirmary. When you look, it's just cute babies. There's a bunch of babies laying there rolling over crying. You don't know who's going to be what. So you're placing a bet on a baby. So imagine going to a hospital today and like, all right, you know what? I think that baby, right? That baby is going to be the next president. Now, you can extract information, right? Because there's information to be extracted. If I look at the baby in the infirmary and I go, well, his mom is 6'7", his dad's 6'9", she's a volleyball player, he was a basketball player. I'm not trying to say he's going to be a professional athlete, but hey, he has a pretty good head start based on his genetics. So now you have to understand where these things come from, right? So like, when we talk about Bitcoin, okay, the greatest thing about Bitcoin is it the fact that you can acknowledge that, you know, everybody knows what Bitcoin is. But is it a transactable token, or is Bitcoin a more of a balance sheet holder, like a gold or a savings account? You as an investor have to get to the bottom of that. Will they eventually start transacting it? Because right now it seems more like a digital balance sheet kind of savings account more than it does a transactable coin, and money is made in transactions. And that's why like everybody likes Ethereum, the platform, right? Because I'm not betting on a horse. I'm getting paid rent for the racetrack. I don't want the horse. You can keep the horse. I want the racetrack. I make more money owning the racetrack than I do the horse sometimes, depending on, right?
Can we just underscore that? Because I'm not even gonna lie. I learned a big lesson. Ether is the coin, Ethereum is the platform, meaning there's more value in the platform based
not
on
more not more value, more stability.
more stability. What did you say?
So there's more stability.
Stability. Okay.
Owning an index fund, right? Because you have more names. So the volatility or the risk is less. So if I own like an ETF, owning a stock, right, is a lot more risky. Not that there isn't risk on both sides. But because I own a pocket of names versus one name, one singular thing, there's always going to be more risk in that one singular than a pocket of items, right? Because they kind of de-risk each other. So
like an ETF kind of sort of, huh?
exactly. So like that's the
Okay.
difference, right? So like it's like, all right, if you're betting on Bitcoin, let's say you're betting on Tesla, and if you're betting on Ethereum, you're betting on QQQ, right? So you're getting access to Tesla through QQQ, but you're not at full risk or full levy, right? And again, it goes back to the first part. Who am I as an investor? What's my expectations? What's my premise? Why am I here? Am I here because my homeboy or homegirl made some money and I want to make some money? Or am I here because I believe in the thesis of the coin and the space, right? And that's the most important part, because that won't shake you. Like, you know, when you walk in your purpose, right, nobody can kind of shake you out of that. And so you can't walk in somebody else's purpose, because it's very easy for somebody to shake you out your boots. And so like as an investor in crypto, like that's the premise of it. There's going to be a bunch of new coins coming, right? Everybody wants to start a coin because it's a new rappers got coins and this person got a coin and that coin. Okay. But what's your thesis behind your coin? Why do you have it? What's the premise of it? Who are you transacting with? What is your goal? Like, we have to start asking questions about cryptocurrencies because it's a hot space right now. So the scariest part about cryptocurrencies is that you can't tell a novice between an expert. I can't tell who's a novice and who's an expert. I can't. We're talking about stocks and like that. It's very hard because it's a new space. So everybody is an expert. You make a little money, you're expert. My expertise doesn't necessarily come in I know everything. My expertise comes in my thought process and my ability to understand myself as an investor. So my expertise is in being me. And there's nobody better at being me than me. And I can master that all day long. So your expertise as an investor in cryptocurrency has to be you. You're the expert on you to know when it's a right time for you to be an investment. I'm not currently in crypto because I have work restrictions, but also I'm not ready to be there yet. It's not stable enough for me as an investor. I don't care about how much money I'm missing out on. It's not about making money. It's about how I make my money. I'm going to make my money how I want to do it. So if you guys all make $1 million tomorrow, I'll be the first person to stand and applaud that you made $1 million. I won't be mad, right? But we all know when somebody wins the lottery, the first thing somebody says is, well, couldn't that be me? You're not even happy for John. Like, you're not even like, yo, I'm so happy John won $1 million. You're thinking, damn, why couldn't that be? I don't want to work no more. I'm sitting on my job. Why could not? I should have played 4. I knew I should have played 4-2-0. Like, you so worried about yourself. So again, like, investing is so simple and life is really simple. People complicate life and people complicate investing. It's a really simple thing. Do what's right for you and not do what you think is going to make you money, or follow behind somebody else, or this person has a platform, or this show told me this. It's like, okay, I know what cryptocurrencies are. I know they're digital, right? Digital exchange. I can exchange goods or exchange different things digitally. So now I know what it is. So it's a transactor. So now you have to know, how much risk do I want to take? Do I feel more comfortable paying for Bitcoin because I have price recognition, name recognition, I'm going to get some growth? Or do I feel more comfortable with a little bit less of a run and I want to own some Ethereum because I feel more comfortable, it's a little stable, it's not going to give me the profits that another coin might give me because the volatility is not there, because what you risk, you get the reward for. Do I feel comfortable there? Or do I want to find something new? Do I want to find, like, say, like, for example, Polk? Like, Polk coins, like the backup API to Ethereum. So there's other things, like there's backup APIs that secure different things. There's different things you can invest in the space. But again, like, where do I find information from, right? Like ARK has some good white papers, like articles and write-ups on cryptocurrency. Very reputable firm, very good track history with regard to innovation. They have some stuff, right? And so, like, that's a thing. And then this is all new to us. So if we're all green and we're all new, we have to regulate our information diet. You can be mentally obese. You can be mentally obese. Like,
so I have a couple questions before we go on, just because I know they're basic questions, and I know. So, okay, let me see which one makes sense first. Okay, so a lot of us are following the trends that are being thrown out there by the Elon Musk or some of our favorite rappers or whatever. How do we, or where do we start to do our own research? Where would you recommend? Like, is there a particular site? Are there, not everybody's into reading books. Are there YouTube channels? Like,
So I'll tell you this first. I'm the worst person to ask on financial books. I think they're a waste.
yeah,
I think that like if a book came out in 2000, it can't really tell me how to live my life in 2021. Right. What I will say is I like life books. Like Atomic Habits is a great book because it teaches you about your habits. If you're not good at life, how are you going to be good at investing? Like if your life or like you're not right or you haven't mastered certain areas of life or just who you are, how can you come into a new area you know nothing about and master it? So I'm more like I'm bigger on like kind of like life books, like digital minimalism, things that make you more aware of your surroundings and more aware about who you are, and it teaches you how to be more efficient. Because whatever bad habits you have, you're going to bring over to this space, and whatever good habits you have, you're going to bring over to space. It's the luggage that we all carry. You all carry some baggage, no matter whatever it is. We all got some baggage with us when we show up. And so if you can minimize your baggage, right? Like the person who knows how to pack the best is always going to have the most fun traveling. I'm the worst person to travel with. I wear a size 15 and I keep my sneakers in the boxes. So I have like 3 suitcases when I go away for a long time because I won't take my shoes out of boxes. And I got like just a whole thing. It looks like I'm moving for like 3 years. Wow. I'm the worst person to travel with, right? Because I'm 6'5", I'm big as heck. Like I'm flying first class. So if you can't afford it, you shouldn't travel. Like I'm a headache to travel with. Like my girl, like she likes it, but I know she drives her nuts. Right. So it's the same thing in this form. If you have bad habits in life, you're going to bring them with you to investing. And whatever good habits you have, so you have to make sure that your baggage is packed a certain way. And that's what's that information diet, right? Like, don't read the same thing 9 times, right? There are 9 different ways. So when I look at platforms, I look at, okay, can I certify the news, right? Is the news verifiable? So is it not like BS? Okay, it's not BS, right? I could pick a platform, Barron's, Wall Street Journal, Seeking Alpha, Bazinga, Zacks. I mean, there's a lot of places you can get your data from, right? But then it's like, okay, I pick maybe 1, 2, 3 platforms at most. I'm not reading the same article 9 different ways. You're wasting your time. People come to me like, yo, I read 8 articles on Apple. I'm like, all you do is read it 8 different ways. You could have just read it one time and went about your day. You wasted 8 hours of your day doing that. Right. Then not over studying this stuff. Like we lose sight of like life. Like this is great. Get your 2-3 hours in if you want and go about your day, because living life is the best way to be an investor because you're constantly investing in things. Your day is consisted of micro investments. What you have for lunch is an investment. What you're going to wear today is an investment. What cologne or perfume is an investment. What kind of socks you have on. Who you talk to is an investment of your time. We're making investment decisions every day, all the time. We're just not associating with the market. And then some white folks get on TV, use some big words and suits and make it seem like this is some magical thing that only they can master. It's like, no. You invest every day. You just don't use that same foresight in the market. Because if I came to you with a business proposition and said, hey, I need $50,000 for a restaurant. Give me $50,000. Well, hold on, Q. What kind of food you going to serve? Where's the restaurant going to be at? How much is the rent? What's the awning going to look like? Who's the chef? Right. Who's the bartender? Ain't that the same that I just told y'all about cryptocurrency?
Right. Do the work. No, I get it. I definitely get it.
So it's the same thing, right? So right. If you want to learn at a deeper level to say, okay, I want to learn more about Bitcoin, the information is there for you to go find it to say, okay, what is a differentiator there? I want to learn more about NFTs, right? Let's talk about NFTs, right? So like non-fungible tokens, right? That's a big space, right? And so like an NFT, right?
Oh, I'm sorry. Before we move on to NFTs, I have one more question about the currency. So a lot of people who are new to investing in coins, they know nothing about owning a wallet. They'll buy through Cash App or some, other.
Through Cash App, are they?
Say that again?
They're not buying through Cash App.
Absolutely, they are. Hello. So that's why I want you to talk about it. So if you could just talk about the different platforms for purchasing, the coins, and here's the common question. So yeah, that was one of them actually.
I think like it sounds like in this space, because it's so new, you have to stick to the name brand places, because those, like, again, like I'll give you a good example, right? Me and you both hate Robinhood. I hate Robinhood. I think it's a waste, right? They don't have customer service. I don't not give you my money. I can't talk to somebody on the phone.
Right.
Yeah, email somebody. That's wild. I don't want to mess a trade up and have to email somebody and wait 2 hours to fix my trade. That's
no. Sometimes 3 days to fix your trade. I heard stories. Yeah.
So it's the same thing in this space, right? Like the names that like we hear all the time, like the Coinbases, like Binance, like the names that you hear that are relatable, that you know for a fact. It may cost you more. Now, again, I'm gonna attain this to life. People pay for convenience and service. I will. Right? We go to restaurants, we go places for convenience and for service. We travel a certain way for convenience. This is the same thing. Right now, nobody's a pro. When you become a pro at something, you can know how to finagle a little bit and get a little bit of a discount or move different. But this space is new for everybody. This isn't something where like you're coming to the stock market has been around for 100. This is brand new. So I'm going to stick to the lakes and the rivers I'm used to. I'm going to go to the Binances, the CoinDesk, the Coinbase, the places that I see the most, because I know that I can hold them accountable if things go wrong. Like I'm a very big proponent. Like I'm not a very big fan of Airbnb, because like if something goes wrong, I have nobody to yell at.
Right.
And I want to be able to yell at somebody if something goes wrong. I paid you my money. I've earned the right to yell. So I'd rather stay in a hotel for just the purpose that if something don't work, I can go downstairs and be like, yo, fam, what's good? Like, what we doing? Like, you know what I mean? You didn't have a problem. But you say Airbnb, they might dub your phone call. Now you there with no Wi-Fi, like with a bad experience.
Absolutely.
You might be in a bad neighborhood or something like that. But the difference is that they've done enough research on millennials to know that as a millennial, we'll sacrifice security for convenience. Older generations like security. So you more inclined to say, you know what, I'll go out of my way to have security because security helps me sleep at nighttime. All right, I can sleep better at night with security. As a millennial, we'll take on more risk for pure convenience. That's just the way our brains work. We're wired different in that way. So in that space, I want to take the risk on the table. So those are the names. I stick to those names. When you talk about wallets, right? There's more advanced stuff we can get to later, but you have online wallets and you have offline wallets that you can actually pull your coins off the exchange and put on an offline wallet. And that, like, those things and ledgers have like back orders, and everybody wants one, and there's a lot going on there in that space because, again, it's brand new. The supply can't keep up with the demand right now. So right now I need to leverage the places that have brand recognition and have a built-in infrastructure that is easy to use, easy to understand, but more importantly, easy to hold accountable. Okay. Right? Like, accountability is a big thing, like in investing, right? Because you hold the company accountable. When you invest in a company, you hold them accountable for what? For making you more money. That's why I invested in. I didn't invest in you to lose money. I invested with you. I'm holding you accountable. You was at the earnings meeting talking about y'all was going to do whoop-de-whoop. Like, what's up? What we doing? And so it's the same thing with this. I want brand recognition, accountability, right? Easy use, right? Stuff that's not over my head. So some of these other wallets that are offline, I don't understand them yet. Like I have a buddy who was the lawyer on some of the ICOs and the original Ethereum. So, and he broke down a lot of
initial coin offering, ICO.
Yes. So initial coin offerings, and he was, on some of the biggest deals with like Ethereum and different things. And he's like, yeah, I have an offline wallet and I have this. I'm like, yo, fam, like, what? Like, right. The wallet's offline. He's like, yo, the wallet's, and then we started doing more space. So even institutionally, right? At my level, we haven't necessarily picked up crypto like that. Okay. Because again, it doesn't behoove us to adapt on their time. We'll adapt on our time. We still control everything. No matter what these exchanges do, they can go to $100 billion. There's still a lot of other old rich money that controls what goes on. So we have to acknowledge the wrong, right? Like institutions are worried about ESG, environmental, social governance, right? That's a good way to put a hurdle in front of cryptocurrency and allow us to move over there on our own speed and not be rushed by the masses. And there's a weird fact, I don't know if it's still true, but when I read this a little while ago, it's funny because 97% of ownership of cryptocurrency, right, is owned institutionally. But like retail investors are like funny because like retail investors, like you ever like lift furniture with somebody and you're stronger than them and they think they're doing something? No, I'm the only person that did that. I have that problem. I be lifting furniture. I got the whole couch up and then like, yeah, I got it. No, you don't. I'm holding the whole couch, fam. What are you talking about? You don't got nothing. You're bugging, right? Like that's what happens to retail investors. Like, oh yeah, we did it. Like you didn't do anything. Like you don't realize, and that's why that fluctuation came down, right? Why? Because the bigger companies start taking profits, right? They say, all right, that was cute for a while. I'm out of here with my bag. And we've seen, a lot of the currencies and a lot of the coins come back down because the whole time that you were holding the couch, you thought you was doing something, you wasn't. And now they put the couch on you and you doing this. You don't even know what to do with the couch. They say, hey, I'm done. I'm going to watch the game.
Right. Right.
And so like that's the thing about like these spaces, that self-awareness of the kind of investor. If you say I want to be involved, I want to be early adopter, put your money over there, come back in 5 years, put your money over there, check it. But you're not going to learn anything by just opening your account every day looking at how much money you have. That's not going to help you learn.
So okay, we can move to NFTs. I just want to recap. So basically this space is for the long term. This is not looking for next month a 100% return on your investment or anything like that. We want to look for the best in class platforms. If we invest in any of these coins, we want to make sure we do the work, do our due diligence, and look at reputable sites. Some of the ones we already know about, but don't just turn to CNBC. Don't just turn to,
right there.
Huh?
Can I stop you right there?
Yeah.
All right. So CNBC, Bloomberg, Reuters, however you want to do it, those are media companies. Right. They get paid for commercial ads. They don't get paid to make you money. They get paid to entertain you. And the more people they entertain, the more money they make. They don't get a cut on you raise the US GDP by 5%, here's some money. You helped fix Black wealth, here's some money. Like they get paid as entertainment platforms. They're strictly there for your entertainment. They're not there to teach you anything. They're not obligated to teach you anything. Right. They're not obligated to do anything for you but entertain you. So that's why on Monday, the market is the greatest market we ever seen. And then on Tuesday, this is the worst thing that we ever seen. And then on Wednesday, it's okay today. And then Thursday, we're back to being the best market. And on Friday, the sky is falling. It's always a different narrative. We all have one friend throughout life who is that exhausting. You call them up on Monday, it's always some famous, always some, what's up with you, bro? Like, what's up with you, homegirl? Like, and then you call them to it's something else. And then Wednesday, yeah, I'm chilling today. Okay, fine, chilling. Yeah, it's like this. Your life exhausts me, and I'm not even near you, and you're exhausting me.
Okay. So how does that differ though from like Benzinga or a Zax, or like not necessarily Zax, but like Benzinga or any of these other online tools, which are technically getting sponsorship ads, right? They're getting companies to pay to be on your site. How do the Bloomberg, CNBCs of the world differ from those sites when it comes to doing research? Yeah.
So like those sites give you the tools to back test what they're telling you, right? So if I go on Bazinga, it'll say, okay, 14 analysts have a hold rating in the stock, 7 analysts have a buy rating. This is the flow of the chart. And even if you don't use that site, you went to Zax or you went somewhere else, you can back check it, right? They're a lot more granular sites, right? So like some of these companies or that do that and do independent research have a lot more granular outlook than what CNBC will pick up or what some of the media outlets pick up. Because again, Bazinga needs you to get it right because they need testimonials. They need you to make money so you could boost their platform. If nobody make no money, they just look dumb because the bigger platforms make money, right? So certain platforms, again, like how can I explain it? So like we watch graduations all the time. So right now we're watching Netflix graduate from being a growth company to a growth at a reasonable price company. This has nothing to do with cryptocurrency, but I'll kind of tie it all about, right? And they're graduating. And by that happening, Roku is stepping up into Netflix's spot to be the next Netflix, right? So same thing in media, right? So you have these media platforms, you have CNBC, Bloomberg, Reuters, right? So kind of like Facebook, Apple, Microsoft, right? And eventually somebody will get enough to graduate to be that level or that class. Like Yahoo Finance is starting to try to do that, right? They have a channel now and they do more stuff. They're investing more in the platform. So like eventually they hope to be in that same breath of stability, and then somebody else behind them will be the new Bazinga, right? That's always kind of the goal. So a lot of times, again, intrinsically speaking, what you're seeing around you is what's going on in any market, whether it's crypto or the stock market.
Okay. All right. Okay. That was perfect. So now we can move on to NFTs.
Okay. So NFTs are non-fungible tokens. So the easiest way to kind of break it down is like art, right? If I create an art this piece, there's only one piece unless I make replicas, but there's only one piece, right? So you ever wonder why that art piece went for $1.5 million or whatever it was, right? Because it's only one. And so with that being said, it is similar to cryptocurrency in that the transactions are put on the ledger on the blockchain, so you can see that the transaction has taken place and what was paid and how that worked out. But it's not, you can't trade like cryptocurrency. If I was to get a non-fungible NFT, I'm buying a moment, a sound, a picture on a digital level, the same way that I would go buy art. But I'm bringing art digitally, so it opens up the doors for more things that are considered art, right, to a certain extent. So maybe my favorite player dunks the basketball. I can get an NFT of him dunking the basketball. That moment is captured. Now, 50 years ago, that moment would be captured on a basketball card. 2021, that moment is captured digitally, and that's only one of those moments. The difference with basketball cards is usually there's more basketball cards, so it dilutes the value. Now,
it's only one, so it would only be one of him dunking.
So one NFT of it. And so person, okay. Now if the person that owns it wants to replicate it, they own the NFT. Wow. They can sell it or replicate it the same way that if I owned a basketball card, I could say, okay, you can make more cards. Or if I owned a picture, right, I can buy certain pictures that are like the same Mona Lisa, but it's not the official Mona, right? Somebody had to license that from Mona Lisa, right, to be able to create more. Same thing in this world. You have to license that moment, and I have to pay the licensing fees, right, to do that. It's very similar to oil and gas, not to get like off topic, but a lot of people don't realize that the way that like these white folks got rich in the South from oil and gas is that if you drill for oil, I can lease my land, I can lease my mineral rights, right, and I'm selling the product that's underneath my ground. So I'm getting paid three ways. Like if you strike oil, I'm not just striking oil and getting paid off the oil. No. I'm gonna now call you up and say, Kim, your oil drilling company, come drill some more. I found some oil in my backyard. Now you have to pay me to use my land to drill because you're gonna make money off the oil, right? And then the minerals, right, give them a better idea of where else to find oil in the same area. So now I can lease my mineral rights to John and say, hey John, here, come, I'm gonna lease my rights to you so you can take all the minerals and figure out how or where the other oil is. And now I'm getting paid three ways, and that's how you get these super old white racist guys that own all this, have all this money because they can make money 5, 6, 7 different ways off of the land, right? And that same thing kind of applies in this way with like NFTs and cryptocurrency, right? You think of it in the same landscape, right? If I have some Bitcoin, I have an NFT, right? I can lease out that if it's a really viral big moment, I'm the only person that owns it. Why wouldn't I lease it out? Doesn't hurt, right? And so it's going to be different ways. And remember, the space is new, so it's constantly changing. You're not the same person you were when you were 13. You're a different person. You're not the same person you were when you were 21. You're gonna grow, learn. So the space is not today. The space isn't what it's going to be in the future. That's why you have to have an understanding of what it is to theorize what could happen. We theorize all the time, right? So you get your paycheck, you pay your bills, and you go, damn, if I can make $25,000 more a year, I could do this, this, and this. And you're theorizing what you could do with the money. Okay, you have this space. You got cryptocurrencies, you got NFTs, right? You have stable coins, you have all that stuff, right? Why aren't you theorizing of what could happen, who could come in, who could partner with, the same way that you could theorize the vacations you would take if you had won the lottery, or what you would buy if you can get a raise at work? Same principles.
Before we move, because I know some people, I told them it'd be an hour, so I want to make sure we have a chance. I mean, I'm good, but I want to make sure we have a chance to get questions answered. But can you explain why Ethereum is the preferred partner for NF, or what is it called, platform? Is it the platform for NFTs?
Yeah. It's the preferred platform because it's the most prepared platform, right? Like, who else is prepared for that level of infrastructure? There's not much competition right now, right? When you talk about platforms, about who's prepared for things, like, they're prepared and there's not much competition. Doesn't mean there won't be competition in the future. There's other platforms that are coming, but right now, if I'm NFTs, right, and if I want an NFT, I want it on the most secure platform. So the same way that like Tesla owns 85% of the EV market, will they own 85% EV market the next 10 years? Heck no, right? But right now they do, because like they're first, like they're the first one that has vehicles, so they own a large segment. It doesn't mean they won't be successful. It doesn't mean they won't make a ton of money. It just means they're going to have to start to diversify how they do things, right? So same thing with Ethereum. Doesn't mean that they're not going to be successful in the future as other platforms come up, but right now they're taking advantage of being first. There's little value in being first. And so that's, to simplify, like, that's why you're first. Where else would you go, right? Like, well, how else would you do the things? I have a ledger that I can track these things on. It can handle all of the data. I don't have to worry about name recognition, brand. I can transact different things across the board, Ether, Bitcoin, also. So it just makes too much sense. It's very easy, right? And we're in the process where people want to get stuff done. So again, who's in charge of this? Millennials. What do we sacrifice? Security. Is it the most secure? Probably not. Even though it's a public ledger, there's probably some security imbalance. I'll tell you right now, just off the way we think as a culture, there's probably something in there, right? Like, that's not perfect. We haven't found the flaw yet. Eventually somebody will find the flaw and they'll patch it, whatever. But that's kind of the lay of the land when it comes to that, right? Like, the NFT is a great way for artists, right? Whether it's music, art, podcasts, movies, actors, to capture their moments and monetize them without having to pay a middleman, right? NBA players, like, people are able to do so. So it's going to be a very white hot space, because this is the first time that I don't need a middleman to transact business. And you know who that pisses off? The middleman. So we have to be smart and not arrogant to think that the middleman is going to find a way to middleman. Like, they are. Like, it is what it is. Like, listen, I call the evils out. They're going to figure out a way to come in here and start regulating and doing this and become the middleman, because there's too much money being made over here for all that money to leave this one area and just come over here and be freely made. And on top of that, be made by Black people. So if you're about to let everybody Black, like, again, this has nothing to do with nothing, but when Dre Beats sold to Apple and people are putting articles out, Dr. Dre made $3 billion. And I'm like, I knew that was fake, because they would never let a Black guy make $3 million. That just doesn't sound right in the world, right? And then you do a deeper dive, and not that he made a bag, but he owned roughly 9% of the company, right? Like 49% was owned by a venture capital firm. Jimmy Iovine owned 17%. Another firm owned that. So he still got, listen, 300-400 million, 500. That's still a bag, but it wasn't the $3 billion that everybody was like, congrats, he's a billionaire now. Like, they were going crazy over. So it's the same thing. We have to be cognizant that they're not going to, just allow people to freely make all this money without them transacting, right? So starting to theorize what else can be used, starting to theorize how we can use these processes. Who do you see partnering with, right? Like, what makes sense? Like, we start thinking about like partnerships. Well, if I look at if I go to the grocery store, I'm like, you know what? It'll be dope if like Oreo partnered with so-and-so. And then one day they do, I'm like, oh, that's dope. I thought about that. I'm fat, right? Like, I add like a lot of stuff. I'm like, you know what? Add bacon to that. You ever be in the kitchen just making stuff up? It'd be fire. Like, you be in the kitchen having a good time. Like, you know, I'm gonna put bacon, a little cinnamon. Like, it'd be something that'd be so fire. And they come out with it and you mad, like, yo, I was my whole thing. Like,
yes.
Right? Like, it's the same principle. Like, it's literally the same principle in this space. Like, it's so brand new that it's okay to theorize. Theorizing doesn't mean that you have to be right. It's just looking at the possibilities of what if, and it opens up your imagination as an investor. And what it does is that if you have a general interest, it takes you down a deeper rabbit hole. And often than not, you're going to learn more learning about one thing than you will trying to learn about 7 different things. That's why I say information diet, right? Now, I can't give you much of a an equation in cryptocurrency, right? I can give you an equation in real stocks. If you learn McDonald's, then you learn about Chipotle, you learn about Starbucks, you learn about Wendy's, you learn about Quality Food Group. Well, how do you learn about them? Okay, well, what's McDonald's doing? McDonald's is trying to monetize their app. There's over 90 million people on the app. They're trying to monetize it. Well, who are the best two apps out for food? Chipotle and Starbucks. So they're trying to do what they're trying to do. What are Chipotle and Starbucks trying to do? They're trying to build more locations. Why? Because McDonald's has 40,000 global locations and Chipotle has 2,700. How are they trying to build locations? Right, smaller location, they can build them faster. So you're gonna get Chipotlanes. They're small. You don't go inside. You pick your food up. Starbucks walk-up windows. They're figuring out ways to try to serve you more. Why? Because they see McDonald's coming over to the digital platform, right? So they're trying to counter that. So now I learned 3 companies by just looking at McDonald's, right? Then I look at McDonald's. Well, what's their second plan? The chicken sandwich. Okay, so everybody wants to have a chicken sandwich because Black people love chicken sandwiches, and we're gonna buy them. And that's their marketing plan, right? They're very upfront about their racism. They don't hide it. That's why I like fast food brands. They don't hide their racism. We're racist, but the food's good, so you're gonna eat it anyway. And so I'm gonna learn about Wendy's, and Quality Food Groups owns Popeyes. And so I've learned 5 companies by just doing research on McDonald's. So same principle. If I go learn about Bitcoin, I'm sure I'm gonna bump into Ethereum and Cardona and Polk, and I'm gonna start bumping into other stuff and figuring out what the inverse is, right? Like, why does this go up and this one goes down? I'm gonna start learning because my information diet's on point. And so when your diet's on point, it allows you to be more efficient, right? And you're not mentally obese. You're not taking in too much information, because if you take in too much information, you can't retain it. And so you spent 4 hours racking your brain, and then tomorrow you don't remember nothing. You wasted 4 hours.
100%. So no, that was perfect. I do want to give, if you have a question, I know there were some questions in the chat, but if you don't mind, just take yourself off mute and ask. I know there's some. Is there anyone who has a question? Or do you want me to read it from the chat? I can't. Everybody being shy. Okay. So here's a question. Did somebody say something?
No. It was Rasheen.
Oh, hey, Rasheen.
I just wanted to know, I didn't know if we were going to just walk over the process of making an NFT or creating an NFT, or is that not what this is about?
So I'm not super keen. I've had friends make one. I'm not super keen on the process of it, right? Because you have to get ready to go through a whole bunch of different regulations and get certified in a way. So I'm not too keen on the actual process. I've never made one before. But if that's a question you have, I can find the answer out for you, because I actually have MBA friends that have made NFTs and have them out. So I can email you or get back to you on that if you like.
Okay, I appreciate it. Thank you.
Yeah, no problem.
Yeah, and Rasheen, when I tell you he's responsive, if you DM him on Instagram and ask that question, he'll follow up with you that way too, because I know you're on social as well. So
okay, thank you.
No problem.
Here's a question from Anne. Oh, you're welcome. What do you look at? Let me know if I start to go out. I just got an unstable notification. Okay, what do you look at to value crypto assets? The place. See, this is why I want y'all to ask the question. The place they try to hold in the current settlement cycle, or partnerships, or ease of access to you. Do you? I guess I'm supposed to say look to for information versus trends. I don't know. Can you see the questions? Yeah, it's general. Oh no, she sent it direct. Oh,
no, it's okay. So I heard the question. So like, what I generally look for is the basic use of things, right? And so like, I look at like the basic use of the coin or the cryptocurrency or the NFT. Like, what's the use case for it? Because the use case is going to be, let me see. The use case is going to be what grows or what becomes a disruptor, right? So the best example I can give you for kind of how my brain works, right? Think of either cryptocurrency, an industry, think of a sector, close your eyes, right? And think of the problem, right? With that area or sector, what could be the problem, and open your eyes and look around. And if it looks like it's 2021, it's going to be tough to disrupt that. But if it doesn't look like 2021, then that business, coin, or sector is easy for disruption, right? And the best example I can give you is financials to fintech. It will take me 6 months to get a home equity line or refinance my rate on my mortgage, and I can go to a fintech and do that in a week or a day to get a loan, right? And the whole sole purpose of a bank is to lend money that's borrowed from somebody else. So if they have a hard time doing that and it feels like 1985 dealing with banks, then the area can be disrupted. So when I look at the coin, I want to know what the base use of it is. And the base use of the coin and what the problem is, right? Is the problem the coin is not yet established? Is the problem that no one knows about the coin? Is the what's the problem? What's the solution? And what the base case is from it. That's what I'm looking at. Because if I can identify the problem and the solution, I'm okay with that. But if I look at a sector, an industry, or a coin, and I look at a problem, I have no solution, that's a bad way to lose money. And by solution, right, I mean like an actual realistic proposition that can happen. So I'll stay with fintech and financials, right? Banks have made money on yield and fear of inflation for the last 4 or 5 months. They'll make some more because they can buy back shares and artificially raise their price. But they're under warfare from fintechs because fintechs are able to acquire customers at such a lower rate. It costs a bank $1,500 for a new customer acquisition. It costs Square or Venmo $20. So PayPal or Square, it costs them $20 per customer acquisition. Eventually, you're going to run into a game of attrition and they're going to have a problem long term. That's a long-term issue with banks. Am I wrong in the short term for not investing in banks? Probably I could have made money, but my long-term view is my long-term view. So I stay away from there because I know that eventually going to eat at the banks, right? Because I see Square offering different products, PayPal offering more banking products. There's more digital banks and different things of that nature that start to pull assets away. And if I pull your assets away and you make money on lending other people's money, how are you going to make money now? It's already a problem. So when I look at a coin, I look at the use case of the coin, what is the problem that can impede me from making money? And if that problem were to occur, what is the solution? And if I can't identify that, I stay away from the investment because I don't want to invest in something that's trying to find a solution. I want to invest in somebody that already has a solution, right? If your air conditioner is broken and I say, hey, I can fix it and I bring Bob, you don't care that I brought Bob. You care that I fixed the air conditioner. And right. Now you're a go-to guy when you have problems. So you're going to call me and say, hey, Q, I'll give you $20 to fix the air conditioner. For all you know, I'm giving Bob $5. I just pocketed $15 for knowing Bob. I fixed your problem. I have all the leverage. Right. That's what I'll look for in any investment. The problem versus solution. What's the problem? We don't like our current monetary system. What's the solution? An alternative monetary system. Got it. Clear. But now they're not going to let their money go that fast. And now you got more problems in here because you got their attention. So now there's bigger problems. Like what's Bitcoin's problem? It's not transactional. What's the solution?
And I will say, just watching Jerome Powell today, the government ain't playing with us. Like they are going to find a way to get a piece of whatever it is we are changing hands with. It was clear. Like whatever this Fed coin that think they're talking about to try to disrupt the rest of the cryptocurrency, it's real. And so we need to do our due diligence. And literally when we were going through some of the basics of investing sessions, there were quite a few people that I spoke to that were dumping like $5,000, $10,000 in Dogecoin because Elon Musk was going to be on Saturday night.
If those people are here in this room, I'm gonna give you my cash app.
They're not.
No, I have a bridge that I'm selling over in Terrytown. Beautiful. It connects you to Rockland County. I'm selling that bridge Okay, I have a good price on it, so feel free to cash at me or put your name on the bridge and everything.
But it's like they wouldn't, it's in their world, it's like it's easier to put $5,000-$10,000 on that, but they won't go to the casino with $5,000-$10,000 and put it like, on the craps table or on the slot machine. For some reason, it's like this pie in the sky type of idea about some of these coins, and it's scary. It's scary. It's scary when I see people do that.
You have to prioritize, right? You have to prioritize your thoughts. A lot of times we will negate that for instant gratification, right? Instant gratification immediately negates your prioritizing of your thoughts. So again, like before I get into an investment, before I fall in love with anything that's financial, I'm prioritizing my thoughts and I'm looking to see if it meets the requirements. And like I said, again, a lot of what we do every day is investing. And so when you go somewhere, whether you're staying at a hotel, whether you're traveling, whether you're going to a restaurant, these places have to meet your requirements or you won't eat there, or you won't stay there, or you won't travel with. So why isn't the same principle held with investing, right? Like when I'm investing in a coin, well, who made the coin? Who's the person in charge of that? Like, who's the person who runs this? Who's in charge? I need to know, right? It's easier now, obviously, as stocks because you know who the CEO is and stuff like that. But again, who am I holding accountable for my expectations? What are my expectations? Am I expecting to make a lot of money tomorrow? Am I expecting to make money in 5 years? That has a lot to do with how you feel. And how you feel is going to dictate what you do. So like, if you get into an investment and you shouldn't have been in the first place and you lose money, you get into scramble mode, and you'll compound your bad decision by making more bad decisions, right? But that comes from like other places in life. So it's like, all right, I probably go point out somewhere else in life where you're doing the same thing. So the key is like, stop being a bad decision maker and then reverse engineer that into investing. Or you're too emotional, right? Like maybe you're too emotional. Maybe like it rained outside, you started crying. Like, well, why are you crying? It was raining outside. It's like, well, you gotta learn how to stop being emotional first before you come over here, because this game ain't for emotions. You have to be what I love about investing is that it makes you be very transparent with yourself. Forget everybody else, because everybody else the bills come in my name. When I look in the mirror in the morning, and I'm as an investor, as a guy that works on Wall Street, however you want to slice it, I have to have an honest conversation with me. Doesn't matter what any of you think. Doesn't matter what my mom thinks. I have to have an honest conversation and be at peace with me to be able to be the best version of myself in the market, so I can think clearly, right, and prioritize my thoughts and have my checklist of how I go about things. Because when I have that, what happens is if I make a mistake, I can check my work. I used to hate in math class. She'd be like, "Oh, check your work. Why? 3 + 3 is 9. Three times 3 is 9." It's like, but in this game, being able to check your work is phenomenal, right? Like the best shooter in NBA history is Steph Curry, and he doesn't shoot 100%, but he's the best shooter of all time, hands down. Nobody can argue that. But why he's the best shooter is because he has an organized process, and he prioritizes his fundamentals. So if Steph Curry goes 2 for 15 tomorrow night, he can go back in the film, look and make an adjustment, and the next night go 15 for 17. Same thing in trading, whether it's coins or stocks. I'm always able to go back and look at where I was right, where I was wrong, and make my adjustment. So I can go back on banks and say, you know what, I was a little too harsh, or I didn't factor in inflation and yield being that big of a deal, and I was wrong here. Next time, I'll have a different outlook, or I won't be as stern, or I'll be more open-minded in this spot. That cost me some money. I'm okay with that though, because I was able to learn from it. So if I'm able to learn from it, it's not a loss. If I lose money and I can't learn from that, then that's just a waste. If I make money, I can't replicate it. What's the point in making money? So you made money in Dogecoin, you can never replicate that. So we're not peers.
Right. It's weird because my trading family's in here too, the group that I'm in with Wayne, and we were talking about this tonight. I had a meeting with them at 7 o'clock, and it's like the lessons are in the losses. Like you really have to, so I had to disconnect from a lot of these platforms, Telegram, WhatsApp, and all of that, because it was just too much noise. And it wasn't real conversation. So it's Zoom meetings like this that help me out, where we can share losses and discuss like what were the lessons in those? What happened? What was I revenge trading? What was I doing that created this loss? And if it was a loss that, if you lost based on conviction, that's one thing. But if you lost on just, trying to, the fear of missing out, or, just trying to, like you said, double down on your losses or something like that, then it's different. It hits different, I should say.
I only emphasize that because this space is so volatile and it's so new. And so like, I emphasize those fundamentals because of that, because in stock game, like it's a little bit different. Because there's a lot more stability. Obviously, there's volatile stocks, but like in this, you can get your shirt taken really fast, right?
Yeah.
So how many people bought, not in this room, but think about it, how many people bought Bitcoin at the top? Through 100,000, 50,000 in Bitcoin when it was 50,000, whatever it is, and where's that today, right? That person, now they may be a long-term believer. Y'all believe long-term, but you've lost all your liquidity. You have no liquidity. So you don't have no leverage, and you have to wait on somebody else's time to get your money back, or to hope to get your money back. What if it never goes back to 50,000, right? But when you bought it with the idea it's going to the moon. And so that's why I'm like harping on the fundamentals, is because like this space is brand new, and it's going to create wealth, and it's going to create millionaires, and people are going to make money, and you're an early adapter and all the other good stuff. But if that's the case, then there's an inverse to that, where you could make everything, you can lose everything. And so we have to be very prescriptive of thought and action. And sometimes the best action is just being still. Like your mom would tell you, just be still. You bother me, you fidgeting, sit down and just don't move. Like you're bothered. Sometimes you gotta treat yourself how your mom treated you when you were a kid. You was doing too much. Just sit still. Sit still, time out and chill out. And so that's gonna help a lot, especially people who are new to the space.
And I just want to say, if anyone else has questions, you can put them in the chat. You can ask. There is one question that I do want to ask about. So I did send out a list of the top 25 terms, but it's actually 26 in the document that every crypto investor should know. Mining is one of them. And there's a lot of conversation about the environment and mining, and how certain coins, I guess, are more destructive to the environment than others through their mining process. Can you talk a little bit about that?
Yeah, so I think, like, again, like the big thing, again, when you talk about certain prioritizing thought, is this: cryptocurrency is not the first priority for governments or business. ESG is. ESG. Right? Because that's been a thing. You can go look up ESG funds. There's a bunch of different ESG funds. There's ESG indexes, ESG, ESG 500. There's a whole bunch of stuff around that, right? Environmental, social, governance. So, whether that is building more environmentally friendly locations, whether that is making sure that you have diversity and inclusion in your business practice, what kind of government, like that encompasses the whole. So everybody's really focused on that, and it trickles down, right? Because if that wasn't number one, then that wouldn't hold Bitcoin or any other kind of coin back, right? They're like, oh, whatever, because like it doesn't stop planes from flying. Like planes are like bad for the environment, but we have millions of flights that just go around the world, right? It's just every time a plane flies, it's bad for the environment. Like the emissions are terrible. So we kind of pick and choose what to acknowledge, right? Natural humanistic things. So like with mining, yes, like Cardona, I think, is one of the ones that are like clean energy. So yeah, looking for coins that are tied to clean energy, that like publicize clean energy or like are associated with it, those guys are probably gonna be faster to be adapters than somebody who doesn't, right? So clean energy is a key word, right? When you're looking at mining, who is mining with clean energy, right? And who is already doing it, who is going to do it, how are they gonna do it, or getting really into the process. Like, I'm very granular to the process, right? So like, again, nothing to do with nothing. I love trains, right? I love the transport sector. I think it's a really interesting sector. Just stuff that we don't talk about, infrastructure, I think is really interesting. And I'll watch videos on YouTube about train conductors to see what their life is like. Are they happy? Are their employees happy? To get a better idea of how the company runs, right? And what I realized about train conductors is they have no control. Like most train companies, you're on call 2-3 hours. You have to be there. And then as you get older, you get to pick your routes. But as you get more seniority, you're on your way out. So it don't matter what you pick. But they give it to you. So I'm like, okay, good business, makes money. The employees will never revolt. They don't have to give them any other higher wages. They have so much leverage. Those companies will always make stable money just by looking at how the employees are treated, right? Same thing with this. Okay, you mine with clean energy. How do you plan on doing that? What is your strategy? How do you continue to do that? Where are you doing this at? Okay, who do you do this with? Is there anybody in conjunction? What companies are? I'm starting to dig deeper into the actual coin, right? Because if ESG is a thing, and I'm Visa, MasterCard, Amazon, Starbucks, and I'm inclined to work with somebody eventually, I want to work with the people who have the best background or the best PR, right? So I can say, hey, yeah, Apple's working with so-and-so and they got the clean energy and we're doing this. I could ride your coattails a little bit. That's the little cachet as to why. So digging deeper into that. But like mining is going to be a thing. ESG is going to be a thing. Why? Because it creates a roadblock that elongates adoption of cryptocurrency, which then allows Jerome Powell and these guys to figure out how they get their piece of the pie. It ain't going nowhere. It's not, the day it goes away is the day they figured it out. When they say, okay, we're not worried about no more, just know the government they figured out it's coming. They're coming now. The same way like the feds come to your house, when the feds come, they got a 99% conviction rate. The same way when the government says, we're not worried about crypto ESG no more, we're fine. Nowhere, right? Because a lot of times you have these big issues and all of a sudden it just goes away. What happened to Ebola? Remember when Ebola was a thing?
Right.
Dying, and like what happened to Ebola? It just went away one day. It just stopped. Like it's just
Right.
all right, you good, be cool.
Wow.
Like
wow. Your analogies are off the chain, boy. You're right. That makes so much sense. Yeah.
So the day they figure it out is the day we stop talking about ESG, and the day you know whoever's positioned there is going to be the first one to win, right? Doesn't mean they're going to win long term, but in the short term, they'll be a winner. So again, identifying those key things and those key indicators are very vital to your success, especially in a space that does not have backbone stability. Again, the market has the Fed stepped in and bought all the bank debt. The Fed stepped in and lower rates. The Fed stepped in and did this. The Fed's going to make a coin. The Fed's going to do so much backing over here. Like it's like the rich kid who can go do whatever he wants to do because mommy and daddy will always give him money for his idea. The broke kid that comes from nothing, he can't take that same risk. So if you equate it to life, right? Tradition, right? Tradition is the biggest liar to us all. Everybody has done this before. I'm like, yo, what'd you do for Thanksgiving? I went to my aunt's house, Q. I hate going to my aunt's house. Well, why do you go? It's tradition, Q. Why? We go every year. But you're voluntarily doing something you don't like because it makes everybody else feel good. And so like it holds you stagnant. And so now you take that, right? And they say, okay, what we want you to do, I want you to go to college for 4 years. And I want you to amass all this debt. And this debt that you have from college, this 4-year period, I want you to take the next 25 years to pay this off, right? And you'll validate it by having a family, having a house, having kids, doing all stuff. And then when you get older, you look back at life and you didn't accomplish anything else and you see your kids living a better life and you're kind of mad a little bit. You won't admit it, but you're a little tight, like, damn, he got to do all the stuff I wanted to do, right? And you're mad. Now, the 3% of people who don't use that as the paradigm of life, that's who you work for. So it's the same semblance in any market you go to when you start to think about those things. It's the people who challenge tradition, who give a high level of thought. Elon Musk was walking indoors saying, hey, I have a car that can run on energy in a world where oil and gas ran everything. He got laughed out of rooms. Who's laughing now? Steve Jobs walked in and said, hey, I can make a computer better than Microsoft and those guys. They laughed at him. Who's laughing now at Apple? So like you have to challenge tradition and challenge.
Let's not forget about Jeff Bezos. That's
so but you have to challenge these things with thought process to get ahead. So the one thing that the market has is a backbone that will always be able to keep itself stable and together. Crypto doesn't have that right now. So think about it. You have to be super prescriptive and thoughtful in the stock market to make money. You got to be 2 times, 3 times, 4 times that prescriptive if you really want to be in here making money in the space and really be trading cryptocurrencies, because there's no backbone to prop you up if things go wrong. If they one day say, hey, this is cool, but every government in the world says, hey, you can only transact in our coin, then what's the other coin's worth? And not saying that's going to happen, but again, When you buy an investment, any investment, you don't buy a guarantee, you buy a range of outcomes. Your thought process allows you to accept those range of outcomes and be most prepared for what comes with them. So when I buy a stock, I might say out of 100 outcomes, there's 80 that I think are positive and 20 that could be negative. But guess what? I'm prepared for all the consequences. Now, there might be 101 consequences I'm not prepared for, but since I'm prepared for this, it doesn't hit me as hard. Mm-hmm. But it's like when you wake up in the morning and Bitcoin was at 50 and it's at 40,000, you just got punched in your face and you don't got no money and you can't do nothing about it. So now you just got a black eye and you're walking around with a black eye until it heals, right? AKA you get your money back.
Right. And we had a tax professional come on for investing for independence who talked about even now with the government mandating that you document your Bitcoin transactions now. And that didn't used to be the case because they're coming for their money. That's what it comes down to. So we do have another question. We have another question. Mr. Wilson, who swears you're his boy. Like he said he was listening to you. I forgot where, but he loved your story about the credit cards. I guess you put the credit cards in the middle of the table.
Hey, stop stealing my thunder, Kim. Stop stealing my thunder.
Sorry. Oh, was that it? I'm sorry.
No, that wasn't it. No, I was just gonna make a comment to build on what Q was saying, which was exactly right. You know, with the crypto being an early space, the one thing I would, just caution everybody to do is make sure you take a look at those white papers. Go to YouTube. Look, there's some great videos to explain what Ethereum is. I mean, Q was on point. He was on point. I mean, I watched an hour-long video. He
Mr.
explained
Wilson?
Huh?
Mr. Wilson, before you continue, I know, can you hear me?
Yeah, I can hear you.
Can you hear me? Okay. I know you're an investor. So can you explain what white papers are? Because there's people in here that have no idea what they're talking about.
Okay, so basically the white paper explains the use of that actual cryptocurrency. But the one thing that I found to help me, which Q kind of touched on it really quick, was you can't value cryptocurrency the same way you value fiat. Because fiat is backed by something. The dollar is backed by gold, it's backed by regulators, like Q was saying. They basically tell us how valuable the dollar is going to be. Whereas cryptocurrency, you have to look at the use of the currency. What is it going to do in the future? If the white paper cannot give you a clearly defined problem or issue that they're trying to solve, along with a clearly defined course of action for that cryptocurrency, I find it best to kind of stay away from those and then do your research with the white paper. Just make sure that when you're reading that paper, it's going to look Greek because there's a lot of terminology that they use that you don't understand or you may not understand, but look for a clearly defined issue that they're trying to solve with that cryptocurrency, and what are the courses of action? What is this currency going to be able to do in the future? Like Q said, theorize, what is it going to do in the future? So that I found that to be kind of helpful when it comes to doing your fundamentals with cryptocurrency. And then again, I don't want to, I'm not giving the class. Q is the expert. I'm not.
I'm not. You hit out the park. Like that's again.
Yeah. That's the. But the only other thing, Q, since I got the floor right now, I got to find some more friends because the friends you have that you play credit card roulette. My card is the only one that keeps coming out. So, yeah. I got to find some new friends.
That's
man.
it. You gotta make sure you find some like-minded individuals. That's the one that put their card on the table. I ain't gonna be the only one that's gonna pay. I'll tell you that.
Well, thank you for that. Appreciate that. I'm quickly just going to go over the common questions. I think we got through most of them. We got a better understanding of crypto and NFTs. Well, Rasheen wants to know specifically how to create. Is that for Journey, Rasheen? If you're still there?
Yeah.
Anyway.
Yeah, it is.
So, okay. Oh, that's beautiful. Let me know. Keep me posted.
I will get
Her
you.
daughter's an artist, so that's
I'm gonna
beautiful.
get you. Like I said, I have a buddy that is a marketer. He's done several NFTs with some of my NBA friends. So I will pick his brain and put you in contact with him, and he can show you the way how he did it. Because the NBA wasn't even happy about that, and they were tight. It's like their players are doing it individually by themselves, and they're not paying the league, and the league is mad about it.
Wow.
Everybody wants a piece, right? Like they had a real big problem. What about us? We don't need you no more. We can figure ourselves. We don't need you for the moment, right? And like the NBA is going to figure out that's going to be very short lived, right? Like they're going to be, all right, well, next year there's going to be new rules. Or when the CBA comes out, they're going to say, hey, you got to do X, Y, Z now, right? And college players get paid now with the name and likeness. There's a whole bunch of stuff coming in the world that's going to change, right? But like what Mr. Wilson said, understanding the white paper and what the use is. Again, what's the problem? What's the solution? If I have a problem, I should have a solution. If not, I just got problems, and I got enough bills. I don't need more problems.
And yeah, how to get started with cryptocurrency investing, and we learned about wallets versus different platforms. Is it worth investing in cryptocurrency and NFTs? It's very speculative. You heard Q say he's not an investor, and he's the expert, right? So fear of missing out is real, but go ahead.
I'll tell people this, like I said, it doesn't fit my, again, like it doesn't fit my model. Doesn't mean, like, I know some of the most brilliant minds that are invested in crypto, but again, they fully understand the risk case of like, yo, if this happened, right? They're fully,
and that's my point.
Yeah, like they're fully, so again, like, I don't, because of Q, like this doesn't fit me. Again, like your portfolio investment should be like your clothes. Your fashion is your fashion. Don't mean that I gotta like it, I gotta wear it. What's on me is on me. I like it. I think I look good in it. You can't tell me nothing else. It is what it is, right? That's how I look at it as fashion. So if you wanna add Bitcoin or something to your wardrobe, don't say, well, Q don't got that, his wardrobe. No. If you can handle it and the volatility, different things. Like I wear a size 15. I can't wear bright sneakers. I'll look like Homie the Clown. It's not a good look for me. I keep a lot of gray, a lot of black, a lot of subtle colors. If I had some neon joints, they might stop me in the streets. Like I got, they be shining all over the place. Neon sneakers for size 15 is not a go, right? So I understand what should be in my wardrobe and what should not be in my wardrobe based upon what I like. Now there's somebody who is size 15, they got a bunch of neon sneakers. Good for them. So remember, it's all about you. It's not about me. It's not about what John's doing. Does it fit your investment thesis and profile as an investor, or doesn't it? And that's kind of the general purpose of investing.
Exactly. So no fear of missing out is, make sure you understand your investment plans and strategies, and then you act accordingly. So what is blockchain and how does it relate to the virtual currency space? I just want to make sure we hit all the points on the agenda. We went over that, how are coins bought and sold? I think we went over that, but if there's a question, let me know. What are the best platforms to use and stay away from? We touched on that, and Q listed a couple, Binance.
It's CoinDesk, it's Coinbase. I mean,
right.
There's other ones, like there's a bunch, right? Everybody has an opinion what they like. You might like something different. To me, again, is it easy to use? Can I hold them accountable? Is it easy to get in contact with somebody if something goes wrong? Like that's
important. Absolutely.
Until I become a pro at it, to where I don't need the assistance, and then I'll worry about that.
And then how to research. We're not looking to CNBC and Bloomberg for our research. We want to do our due diligence and go to some sites that there's a consequence and repercussion if they have an audience that loses just tons of money. Like,
I'll generalize.
We want to make sure we do our due diligence with it.
It doesn't mean that you don't, like, you can't read those platforms. It's just like, don't take those as full, like they say, do this, don't go.
It's a media company.
Yeah, right. Like, again, if you like the way they write articles, by all means read it. Take everything with a grain of salt. To me, I have a certain thing I look for where, like, there's a bunch of, like, usually ex-investment guys that start their own platform that are really honest and transparent. I like to find different minds because I like to kind of dig deeper. So for me, it's like I like kind of like the undiscovered artists, right? Some people love mainstream artists. I love the artists that are undiscovered because they make music that they want to make. They're not making music they're told to make.
Right.
So I like to find certain people that have worked in the industry, that have a great resume. I can certify that they've been in the game through LinkedIn, different things, and maybe they have a platform, or maybe I got to pay $10 or $12, whatever it is. But I like that because I know I'm getting something or a thought process that's not mainstream, and it helps me formulate my thought process. I mean, I'm going to steal their thought process, but what I'm exposing myself to. So same thing musically, like I like underground artists that aren't mainstream because to me, I get a better level of artistry and the content feels better to me. So like same thing with this, the content feels better. So I like that. Doesn't mean you have to like that. But for me, that helps me theorize and figure out my investment process a lot easier as I go through news and different things.
Totally makes sense. So we talked about how to spot red flags. And I'm just going to say, if you have a question, ask now, forever hold your peace. You have them here for the next minute or so, but I just want to personally say, thank you so much for answering the call. This was true. I took more notes probably than I thought I would for me personally, because I am a Cash App investor. And full transparency, I just started investing in Bitcoin during the pandemic because I wasn't going out. I wasn't spending money. So I was like, okay, if I put $20 in every 2 weeks, it's like 2 drinks in New York City, right? So I was just like, what's the worst that could happen? I'm actually up, which is a beautiful thing, but I started, like I said, the middle, not even, maybe like June of last year, maybe May. So anyway, but I know now that I need to, look more for the best in class approach and if I'm going to take this serious, basically, because I'm not even looking at the ups and downs. The only reason I look at where Bitcoin is today is because I trade like Mara and Riot and some other stocks. So it makes sense for me, and Coinbase as well. So yeah, so we do have a surprise for you, Q.
What's that?
We have treated you to dinner.
Oh, wow.
If you check your emails, it should be there now. It's supposed to be delivered at 10 o'clock. Okay. You should be able to eat very well at Chipotle for at least the next 2 weeks.
Okay.
So check your email. We appreciate.
I'm known to turn down a free meal.
I'm a big believer. And we know Chipotle's your thing. So we appreciate you. I definitely appreciate you. And if there's any questions, no questions, unmute yourself.
I'm not difficult to find, so don't ask questions now. Got questions. Again, thank you guys for listening to me babble.
Wait, someone may have a question. The only reason I'm saying this, Q, is because what's going to happen is we're going to end this call, and my email is going to get flooded with questions.
I don't have a question.
So someone has a question.
Have a question, but I do want to say that I do enjoy watching and listening to you on the Come Up series every week. And I've learned a lot, and I was thoroughly happy to hear that you were going to be at this particular class tonight. So, just wanted to say thank you for the knowledge and wisdom that you share with us weekly.
Oh, no problem. I'm glad that you guys enjoy it. Thank you. For me, I just love giving back, and especially people who look like me. It's important that I don't keep all this stuff bottled in my head. I'll go crazy, but I just appreciate you guys. Like I said, listen to me babble for an hour and a half. So for me, I just be up here talking. I don't really got no plan. I don't got no preset message. I just be up here chatting. So I appreciate you guys having patience, and it's a two-way street. It's not just a one-way street. I appreciate everybody's time. We have the same 24 hours a day. So it's about me being appreciative of you guys as much as you guys are appreciative of me.
I would like to put out the request now for maybe in